lifestyle is in focus after its Q1 number, and of course on the back of tariff that we are seeing. But let me just get you the key takeaways when it comes to Q1 FY26 numbers. They've recorded Q1 revenue, which was led by strong growth in branded textiles and apparel. EBITDA growth was on account of operating leverage that the company has seen, and growth in bottom line, that is profit. This was despite marketing investments and muted consumer demand that the company has seen. Garmenting revenue was impacted due to US tariff uncertainty, leading to weaker order book. But to speak about more on numbers and what is the outlook going ahead, we are here joined by Amit Agarwal, who is the Group CFO of Raymond Lifestyle. Hi Amit, welcome to the show and pleasure to have you. So kind of
Thank you.
very pleasure to have you. Well, we're seeing kind of turnaround when it comes to Raymond Lifestyle. Any hits and misses this quarter that you would like to tell us?
No, actually, we are very pleased with the performance which we have been able to deliver in this quarter. As you can see, the demand was still continues to be muted, but we have been able to put together our products in much nicer manner, and both the fabrics as well as the branded apparel has delivered a growth which is constituting more than the range of 27% in textiles, 22% in the apparels, which are the main key segments in the domestic market. And that is led by the volume growth. So it is not a price-led growth, it is a volume-led growth. And I think that is something which we have looked for very, very carefully. Two things what we have done, very clearly we have put together some newer products at a price point which was able to replace some of the imported fabrics which were being sold into the Indian markets. Second thing which we have been also able to do is bringing what are the new products and communicating it with the consumer at large. So communication is very, very key, the advertisement or explanation around that. And I think these two has led us to move in terms of revenue growth, and which eventually delivers the profitability. If I look at the EBITDA growth, we grew by almost 36% from 89 crores to 122 crores in this quarter. So that has been quite robust. And as far as garmenting is concerned, we have really got a lower sales, primarily because of the US tariffs. As you know, every day it keeps changing. We have seen very clearly what happened yesterday, completely out of blue. So I think a lot of our retailers in the US are holding back the supplies from India.
Amit, good that you made this point with regards to tariffs. Actually, Hiral, this side. My question before we speak about the other part of the earnings is also that the garmenting segment revenue that you're indicating did decline on the back of the uncertainty on account of US tariff announcements. Firstly, what's the kind of total exposure that Raymond Lifestyle has to the US? And two, if they are holding back purchases right now and a 50% tariff does come in, what would you do?
Yeah, okay. So first of all, let me answer it at a high level. These 50% tariff and the stance taken by the US changes practically every day. And it is not with us, it is happening with other countries as well. Who knew? They agreed with Japan, and yesterday night they again gave an increase in the tariff. So I think this is a very, what should I say, a volatile situation which keeps changing, and we need to watch out carefully. And there should not be a knee-jerk reaction based on one announcement made by White House. So I think we are very clear that we have a long-term play. Now, as far as our exposure is concerned, you look at it, out of our total garmenting revenue, almost 50-55% comes from the US. And of that, almost 30% of that is coming from our Ethiopian plant, and Ethiopia continues to be at the lowest duty rate, tariff rate of 10%. So I don't think so there would be any impact in Ethiopian business. Rather, it has a potential to grow the business. Second thing, when we talk about the business in India, we always have a flexibility. If it really continues for a few months, we have the flexibility to move some of the machines, and these are not very large machines, from India into Ethiopia and do more business out there. The third thing, which is also a possibility, that we can support by supplying our fabrics into the countries like Bangladesh or what you call Vietnam, so that we can continue. And we had already sent our teams to Vietnam somewhere in the month of February, March, that we can export some of our fabrics to get it converted there and shipped out eventually to the US market. But as I said, it is not appropriate to make any knee-jerk reaction onto this, whether you never know what is going to happen tomorrow. And we know two more things which are very clear, given that they are sending their team in the third week. US is sending their team in third week to India for a trade deal
So
negotiation.
Amit, if I get your point correctly, okay, so from the 50% of the business that goes to the US, uh, what percentage of it is going from Ethiopia, number one? What percentage of it is getting exported from India? Yes, on the Ethiopian side, it will be beneficial because you're just talking about a 10% tariff. But the kind of business that you have from India directly to the US, is there a possibility where you will be able to mitigate that risk by shifting that business from India to Ethiopia or any other country? What is that strategy going to look like in terms of 50%? I'm sure there will be negotiations, but let's take hypothetically it's 50%.
Okay, so to be clear, so let me give you the specific numbers. This is 550 crore is the total revenue for us out of 7,000 crore revenue of a lifestyle.
Okay.
So it is what I was talking, 50% was only for the garmenting piece of the
Correct.
business. So in that business, around 400 crore comes from India, 150 crore comes from Ethiopia. It still has a capacity of another 50 to 75 crore to increase from Ethiopia, which we will be able to transfer the business out of India into Ethiopia. Rest of the business, we have the flexibility to support through Bangladesh and Vietnam, because we are already in discussion. And this is not the first time we are having this discussion. We have been having this discussion for quite some time, that whether something happens, then we should be having the flexibility to move some of the fabrics. However, anything movement right now, because in the US, they go for a Thanksgiving sale and the Christmas sale, and the time for that is less than 4 months. Now, if you look at it, anything you start new, a fabric takes anything between 75 to 90 days. A garmenting takes another 45, 50 days. And the shipment between India, Bangladesh, Vietnam to the US, another 30 to 45 days. So therefore, if I take entirely this whole thing, it is a question of more like 5 to 6 months. And therefore, they will not be able, the retailers in the US would not be able to meet their requirement for this period. So I think to that extent, they will find ways to get the products out of India also. Maybe it is a little bit right now in the next few days, but I think by the end of this quarter, things should settle down. That's our stronger belief. And that's what we are hearing also from our customers already, because some of the customers did call us yesterday night itself.
Right, Amit, your losses have narrowed down from 23 crore loss of 19 crore. What's the path to profitability now?
So actually, as I said, that this first quarter in entire history of Raymond is the seasonally weakest quarter, because for us the products get sold primarily for the festive and the wedding season, which starts from the second quarter. I put the inventory before the retailers, and the retailers then start selling into the secondary market. But in spite of that, what we have been able to deliver, the 1425 crore revenue, is the highest ever revenue in the record 100 years in the history of Raymond. So to that extent, we say we are fully satisfied. And the as soon as the revenue increases, and generally you consider the first quarter to be more like 18-19% revenue for the entire year. And accordingly, as soon as the revenue increases, you get the operating leverage, and thereby you start delivering much higher substantial profitability of the business.
So, a quick 30-second, Amit, will FY26 be a year of profitability, or do you see there could be some bit of doubts on that front, taking the uncertainties into consideration right now?
No, absolutely, it will be much, much more stronger compared to FY25. And we are very clear, because a significant, almost say 85% of our business is in India. So that has no impact of tariff and so on. And I think what the recently with the tax benefit and such things has happened, I think the consumer are coming back, and we believe this festive season and the wedding should be much more stronger.
Probably.
So to that extent, we believe a stronger year this year compared to last year.
So a domestic market play is what you're betting big on as well. But thank you so much for joining
Yes.
us on the show and sharing your views as well. So that's the management of Raymond Lifestyle, clearly categorically indicating the kind of impact, the tariffs could have, but seeing insulation from the domestic market.